Hello and welcome to another episode of The Trade Stylist, the place where we craft your trade. Once again, we move in and see how the markets have been doing. But before that, we start with the disclaimers, which are obviously that all views are personal, and the fact that you can have more losses than your investments in this trading community. So, once again, hello. I am David Jyoti, better known as DJ, and I'm also here as the Trade Stylist. You can find me on Twitter, YouTube, Instagram, and I'm here to craft your trade. So, may the trading gods be with us always as we start with a prayer. And let's move on to the market update. So, if we look at it, the soft complex still doing really well. In fact, Robusta has now started picking up steam. What can we say about cocoa? It's breaking records, all-time highs, and we don't think that the problem is really solved till now. So till the next couple of months, I think it stays very strong, unless and until there's some huge demand destruction coming your way. Orange juice also stays pretty high compared to normal averages, but cotton and sugar finally start losing some steam. On the grains fronts, on the other side, more or less a mixed bag. Corn and wheat sort of on the downside, soybean meal mixed with soybean meal and oil sort of reversing each other. Soybean oil losing almost 7%, while soybean meal positive by 3.2%, and soybean roughly at the same level at around 1170s, flirting with the $1,200 level. Now, if we go to the YTD performance, we see that finally sugar and cotton are negative year on year. Compared to where it was just a year back, but that for cocoa we are running out of spaces on the graphs. I mean, there's nothing that compares even close to it. And finally, Robusta is picking up even higher steam. So let's see how far this journey goes. On the grain, still strongly negative. Corn still losing the maximum year on year, but slowly that's also under pressure from soybean meal as well. Looking at why this has been happening, when we go to the section on tradecraft, typically our trades are doing well. So if we look at the corn futures, we moved up a little bit, looking like it's doing a base forming, which is what I expected it to do. And if it does move up, which it has tried a few times, I think then we get a nice bounce out of it and probably make some decent money on the trade. On the other side, we have wheat, which is now coming into zone where I want to buy. I have bought one, as you know, and I think if the market does continue building, then I add to the position. Otherwise, I exit with a small profit. So yeah, I think it's still a positive location. It's trying to look like it's building a channel here. It looks still sort of overall trend, long-term trend has been bearish, but channel formation can lead to sort of new rallies. Sort of continuations, so this is something to watch. The channel hasn't been broken as of now, and it's almost been a month and a half, so it seems to be a decent trade again as of now. Going forward, we look at trades peak, which is what is being said by the market, and right now I think the entire discussion is about coffee and how Arabica and Robusta coffee prices are shooting up. Now, this is primarily on the expectation of crops coming out of Brazil and also a little bit in Vietnam. So, Robusta demand over the last 2 years have risen frantically. In fact, post-COVID, when the market shifted in favor of cheaper Robustas, the market is sort of not looking back. So, a lot of the companies changed the recipes and the flavor of Robustas, and the colloquial knowledge of Arabica tasting better, having a more refined taste, is sort of lost on the consumers as well. So because sort of there have been substitution in terms of flavor profiling, there are additional flavors which are being put into these coffee drinks, and most of the coffees which are getting sold to the mass market are frappes or lattes, where it's not exactly the flavor of the coffee that's getting sold, it's more the sugar and the milk and the additives that is getting sold. With just a caffeine boost, you'd see more of the coffees going into caffeinated products. The other big huge category is caffeinated water and caffeinated drinks, energy drinks for example, where Robustas are now probably the only source of coffee or caffeine being used. Even extractions of caffeine from Robustas are going in, and that is what is sort of driving the market. Does that define the fundamental shift in the pricing strategy of Robusta going premium to Arabica? Not probably. It is definitely driven also by speculator activity, but at the same time, the market doesn't want itself to be caught out the same way they did in cocoa. A lot of the processing industry did not probably take positions at the right time on cocoa, and that's why the prices moved in tandem to the hedge funds who also took long positions. So it became a self-fulfilling prophecy. In this case, the market is sort of getting ahead of itself. The crop, to be fair, from reports I'm getting, doesn't look to be that bad out of Brazil or from Vietnam. But it is the fact that there are slower shipments happening. It is the fact that farmers are expecting better prices due to inflation, due to cost of production. And of course, the traders want the markets to go up higher before the season so that they can lock in decent contracts and then bank probably for the markets to go the other way. So all the three factors combining with some climate things thrown in, right now Robusta and Arabica both are in flavor. Arabica hasn't touched multi-decade highs, by the way, but Robusta sure is. So yeah, keep an eye on this market. It can get really frothy as we've seen in cocoa. Moving on to the trader peak. Well, definitely the points of interest is that Iran has seized a ship in the Strait of Hormuz. This is breaking news, by the way, last 4-5 hours. The China cost of natural disaster is almost at $3.3 billion just for Q1 2024, and that's Chinese estimates. And we need to look at how this number keeps adding up, looking at the other news that's coming out of China as well. So Musk and Argentina are agreeing almost a lithium contract, which makes it quite profitable for Tesla to be sourcing. Gold prices, on the other hand, are surging further on fiat currency fears. Gold is doing really well as an inflation hedge as well. And then again, China March exports and imports have shrunk, and they've missed the forecast quite badly, which is pointing towards a contraction in the Chinese economy. And on top, the cost of natural disaster, which what we spoke about, is probably going to put some pressure on them economically. The other thing is the USDA Brazil and Argentina crop reports are widely varying from local production, and this is primarily about maize production, where Argentina's production reports are significantly down compared from USDA's views, almost 5.5 to 6 million bushels difference in crop production sizes, and which is not a small difference. It's a 10%. I mean, 55 million was the initial production report, and right now it's estimated around 50.5 million. So that's almost a 10% crop size difference, which is quite significant, and that's something that we need to watch out. And finally, ADM recalls additional animal feed products. This is on top of the recalls that done in March. So I think the problems are not going away. It's primarily, I think, magnesium and sodium that they've declared, but that's something to be watchful as well, especially if you're in the US. Moving on, this is inflation week. We're talking about Japan inflation, we're talking about China inflation and GDP, we're talking about UK inflation, and of course the retail sales of US and China, which are both something that I do watch quite closely. Moving on towards cancellations and why they sort of make sense. And I would suggest that for this section, do look at the shorts. Yes, I'm probably going to do a shorts on this. So yeah, the format number is that cancellation number one, it does not mean that buyers are walking away, and that's the primary difference. Cancellation does not mean that a trade just gets annulled. It basically means that the trades are being offset by something to cancel out the effect of the initial trades. This involves either an exchange of positions or an exchange of cash. And there are three basic factors which determine whether a trade is cancelled from different origins. And the number one for that is basis, which basically talks about supply and demand. The number two is the freight spreads. Crazy, right? The freight spreads between shipping grains, let's say from the US to China versus Argentina to China versus Brazil to China, is something that sort of determines whether a buyer walks away from a contract which is from US. And finally, it's the cost of carry wherever the production is, basis the origin. It is not a destination cost of carry, because that's the same. It's the origin cost of carry that sort of defines whether there's a trade cancellation. Then we move on to trade next, which is what's happening on the next week. And next week, we definitely going to trade deeper. We'll look at Mace, we'll look at Contrade Versi once again, and then we look at Tradecraft, which is about trading some more. So I do hope you enjoyed this session coming to you from Africa right now. Next week we'll be in a different destination, and I hope you look forward to it. It's going to be probably a live session as well. And this is the Trade Stylist. I hope I've been able to add some value to your weekend. Look forward to see you on the next episode on the 20th of April 2024. Have a good weekend, everybody, and a profitable one. Cheers.